Good morning, traders. It's 8:02 a.m. Chicago time on Wednesday, the 21st of June, 2017. Thanks for joining me again on another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. There isn't very much to talk about in terms of news overnight. There, there was some discussion by the Iranians. The Iranian oil minister that there's discussion that they're likely to tighten supply a little bit more in crude. As you saw yesterday, crude uh, closed the prior day at about 44.50 or so, and gap down on the open yesterday. Crude ended up opening around 43.30, leaving a gap zone behind. And overall, it's a laggard. This morning's market stance is mixed again, slightly to the slightly bearish. We're looking at Euro Stoxx 50 being the leader on the downside, the laggard on the downside. So we're looking at 14 points down in the Euro Stoxx, 54 down in the DAX, 0.42% in both indices, followed by the U.S. Treasury bond, which is interesting. The leader today, this morning, is the Nasdaq up 9 points, followed by the Euro FX and crude oil. The Russell and the S&P are teetering around unchanged. So there's not much that was priced in overnight, although the overnight session has some pretty good volume in it. We'll look at that in a minute. Again, not much to discuss as far as news. One thing that came out of the S&P, the S&P Chief Ratings Officer Kramer says China rating has a negative outlook, signaling a downgrade is a real possibility. That would get things moving a lot. There's quite a debt bubble going on over there in China, and they may see a correction and a repricing for that. And of course, those who are trading currencies, the Brazil Federal Police found evidence that the President Temer, is receiving bribes, so that currency is likely to see some movement. Currency pair with the Brazilian. As far as what we're looking for today, the deck's pretty clear. We just have a 10 o'clock Eastern U.S. existing home sales for May, expecting 5.54 million. And then we get crude oil inventories at 10:30. Crude oil inventories show an expected draw of 1.2 million barrels. Distillate inventory is expecting a surplus of 500,000, and gasoline inventory is expecting a surplus of 101,000. Okay. So let's switch gears here. I don't have very much to say. I mean, the auction has been just pretty dead, especially in the S&P. There's not too much color that I can give each morning, given that we are just in a rally, pullback, consolidate, rally, pullback, consolidate kind of pattern. We've been in it for quite some time. This is what we expected. This is what I expected yesterday. Yesterday I was looking for selling to come in. At the time of the Trader Bite, the market's trading in the 46 handle, 46 to 47 handle, and the expectation is for a small drop and then for it to pick up steam and finish what it started here, finish this pretty poor high over on the prior day on Monday. So I was looking for the market to push into that and to test to see if there are still some interested buyers above that price. It did not manage to do that. The second hypothesis, I still looked for participation on the buy side early on, but the overall hypothesis is down, looking for a movement towards the bottom of Monday's range with a rally on the close. So I was looking for rebalance to the positive side on the close. This is what actually happened. Here's what we got yesterday. So compared to the prior day, we simply could not rotate up at all. The hypo was to push up into the prior day's high, potentially tag it, and then start to move down towards the lower end of the range, and then to rally into the close. That was hypo 2, and it just couldn't find any bids really. It put in an opening swing. It breached the opening swing to the downside and was unable to get to the other side of the opening swing. Looked bearish. We left behind with a high of 46.75. We stopped just one tick short of the prior day's point of control and a tick short of the prior day's point of control and 3 ticks short of the prior close. Just no steam to the buy side at all. And overall, what we had is a downward channel for the day. Some buying into the close. But yesterday's profile is not telling me anything. It's got no real consensus. It is basically just a pretty even profile. Uh, there's no real balance yesterday. It didn't trend, but it didn't balance. The volume was 1.17 million, which is pretty much a little bit above the most common, but very much in line with what we consider to be normal for this product. The range was 46.75 down to 34, 13 points or so, which is also fairly normal for a down day. So the reason I don't call this a trend day is because we don't have clear exploration in the form of consolidate, move, consolidate, move, consolidate, move, consolidate, move, with a shift with the market finally finding its balance and shifting the point of control to one extreme or the other. The point of control remained inside of the prior day's range, inside of the initial balance as well. It didn't quite meet the factors needed to call it trend, at least in the metrics that I use to measure trend and to come up with a trend statistic. So it is somewhat trendy. It is somewhat trendy in nature. However, it's missing some of the price discovery, especially to the downside. 13 points on a trend day is pretty thin. So I didn't call this trend. I call this normal variation. Um, and the market left a fairly weak low. So the expectation was for the market to open up, test a little bit higher, and then continue lower before coming back. And that's basically what we have coming into the overnight session. So the overnight session, it opened and just traded sideways, and then got hit at the Asian Open, and then hit again around the opening of the treasuries in Europe, and has been rallying since. So we've been pushing right up against the overnight high. We're trading inside of the gap that we put in a couple days ago over the weekend. The volume overnight is quite heavy, 223,000 versus 135 to 140,000, which is what is common. So overall, yes, we are selling off. Yes, we did sell off yesterday and into the overnight session, but is this really a sell-off? It really isn't. There's not much that has been covered, not much ground that has been covered. If you look at the daily composite chart right here, you'll see that they're really, what have we done? It's really not. So this is a daily chart of the RTH session or the pit session. And you can see here we keep, bouncing around and putting in gaps and then selling off just a little bit. Yesterday's sell-off, it did end the one time framing up we've had for a couple of days since late last week. And it did poke into the gap down into the middle of the gap range. But we didn't really accomplish much yesterday, even on the sell side. Given how far we've come, it really isn't much of a sell-off. So the range is fairly normal. Volume was okay. the overnight session does lead me to believe that there is some participation there because the volume is fairly high. So I'm expecting that to carry into today's session and give us some opportunities for rotations. We are getting the existing home sales number, and we're getting crude today again. Crude's been the mover. Crude is a much more uh, crude is a much more interesting uh, product to trade right now, along with the Nasdaq. I do not recommend trading crude, however, because it is a fundamental, physically delivered product that is driven by pure supply and demand, not by an underlying cash market, right? So that's important. So here's what we've accomplished this week. We opened in a gap. We pushed higher, pushed to new all-time highs of 51.50, and all we've done is basically pulled back on pulled back yesterday and are retracing some of the work that we've done. So if we bring this back, the profile excuse me, the profile is elongated. The volume profile is not saying anything either. So when I scroll back here and do a profile on both days, it's not saying much either. It's saying that the market's just exploring across the board. Hopefully it continues to do so. Um, it continues to do so through today, and gives us more decent rotations. Yesterday, the trade did show some pretty good follow through, some pretty good pullbacks. It was a decent trade. However, we are against, like I've said in many webinars and discussions through the last few years that I've been online, openly talking about my trading. As I've always said, the least favorite thing for me is a market that's pushing highs. It's incredibly uninteresting. It's low volatility. It's not a great day trade. It's great for swing trading. It's great for buy and hold or whatever, but it's not an incredibly interesting trade intraday. Um, Taking bets on smaller rotations, which requires a smaller risk structure, smaller account size, and so on. So that's where we are. As far as what I'm expecting today, today I'm looking for this to base. I'm looking for this to finish higher. So I'm looking for the market to finish somewhere in this region today. So as we come into the open, we're right against yesterday's close. We're basically unchanged on the session. The S&P is up one tick at 37.75 right now. 37.50 is the close. The open, I'm expecting an open auction. I'm expecting the market to start pushing lower again, but I'm looking for it to base. The key thing I'm looking for today is a failed attempt at the low with an impulsive rotation up, and then I'm looking to target 24.41.25, which is yesterday's point of control. And then if we do have some oomph, the extended target is likely to be here. I'm expecting it to be quiet throughout the afternoon and then later finish somewhere in the 45 area. That is hypo 1. So I'm looking for the market to retrace some of its action that it's done over the last couple of days. We still haven't filled the gap zone completely. So if we pull the flex levels up, we still have a little bit of gap zone beneath us. And I'm looking for that to be filled. I'm looking for for Friday's range to be tested. For the Friday's range to be tested. Um, Before the bounce. So that's the key element today. If we don't if we don't see that, we start to get a push higher early on. I'm looking for that push to base and then for it to continue higher and potentially reach that point of control up top. The point of control comes from the 2-day profile at 47. And that's what I'm looking for hypo 2. Now, barring those two, assuming that there's complete inability to find buyers, as we have not been able to yesterday. If we're unable to find buyers at all, hypo 3 presents some really great scenarios. Hypo 3 looking for a quick test up for it to be responsive. I'm looking then for rotations to start pushing us down to 24.30 for the bounce, continue down to 27, and then put in a sharp V, and then pull back into the range later in the session. So that's hypo 3 right there. Okay, so it's just, it's these conversations may be getting boring, right? We're not getting anywhere really, but as I was meeting, I met with Mike Bellafiore yesterday. He was in Chicago. He's with SMB Capital, really good guy. Love talking to him. Very experienced. He and I had a um, very parallel trading experience in history. He runs a prop shop in New York that also does education and things like that. And and I was telling him how it's quite incredible from the time I started till now. The the people who were there when I started were doing really well, and then as the market changed, they they started to complain about how the market is now, how the trade is dead, and then the good old days were much much better. And then I came along and I learned and I struggled and I made the turn, started making money, and things were very good. Then the market changed a little bit after the dot-com bubble and 9/11 and so on. And then it became harder to make money. And then you have to reminisce and say, oh my God, the good old days, it was like printing money. And then you get another cycle where things are great. You get the 2007 correction, then the 2008, 2009 crash. Things are amazing. The market has a risk premium to it. The market's moving and you're having a great time and more people are having a great time. And then it crashes and it goes dead. And then my point is, it is constantly doing that. And you have to sit through these lengthy, grindy, slow um, movement in order to participate and be able to recognize when the actual great times come along, or the great rotations come along, the opportunities, the bigger opportunities. So our job is to grind every day, just like everybody else that's going to work. Uh, but you're not going to be able to go do something else, run a real estate business or whatever, and just show up when things are moving around and expect to do well. You'll probably lose all your money. You need to grind through this, and this is the area where you hone in on your errors and your skills to participate when the market actually loosens up. Remember, for most traders that I've known, you make your year in 1 or 2 months. The rest of the time, you're just showing up, turning on the light, doing your work, following your routine, turning off the light, coming back the next day and doing it again and again. This is a job. It's not a hobby. It's not intended to be fun every day. If you're having a lot of fun trading, then sooner or later that's likely to catch up and it'll slow you down. The market's is the biggest humbler that I know. Anyway, just wanted to leave you with those thoughts. Good luck today, and I'll catch you tomorrow. Take care.